Trade talks wrapping up, and one single word echoing all week around this TV studio.
Optimism.
Optimism.
Optimism around a deal.
There's a deal to be done here.
You get some resolution there.
Some type of resolution.
Optimism returns.
The market's got a lot more optimistic on the outcome of this.
There is a good chance that we do get some kind of trade deal.
Clearly, there's some positive headlines coming out.
The belief that the trade tensions may ease.
But I think there'll be progress on the trade. It could be progress pretty soon.
The odds for a sort of an agreement or a deal should be much higher from here.
Both President Xi and Trump have signaled that they want a deal.
Because the U.S. is slowing down, China is also slowing down, so a trade war is clearly not the best sort of strategy given the pressure on both economies.
Joining me around the table here in New York is Lori Calvasina, RBC Capital Markets U.S. Equity Strategy Head, Mike Schumacher, Wells Fargo Securities Managing Director and Head of Rate Strategy, and Anne Mathias, Vanguard, Global Rates and FX Strategist. Guys, great to have you with us. So, Lori, the word optimism just ringing around this studio. Is there a little bit too much optimism?
I don't think there is too much optimism. If you look at data, you look at AAII, you look at the CFTC data on futures positioning, you know, we're hearing a lot of optimism talked about in regards to trade specifically, but I don't think it's gotten excessive yet for the market as a whole.
What do you think, Mike?
Maybe a little bit overdone. I mean, the idea of getting a big deal, we've heard talk about this for months and months, hasn't happened, so why is this the time? I'm a little skeptical.
Anne?
I would say let's take the discussion a little bit broader. This discussion about optimism or pessimism is really a discussion about global growth. And global trade is just a proxy for global growth. Are we going to ruin global growth through a bad trade agreement and trade fights, or will global growth somehow recover?
Well, let me reverse engineer that just a little bit. Does a global trade agreement between the United States and China go some way, and to what degree, to solving some of the issues with global growth?
The trade deal itself is not going to result in all of a sudden, you know, a huge change in the global growth trajectory. But I do think that it'll allow people to at least say, OK, we have some breathing room. Let's see if we can recover and have a soft landing, at least in the U.S., not the Fed tightening too much. Other central banks around the world are pretty dovish right now. We've moved all central banks from, you know, we had this asynchronous hiking cycle going on where the Fed was tight, everybody else was loose. Now everybody's tilting dovish. So that plus a trade agreement, that could kind of reignite some optimism.
Is that your view of things too, Lori?
Well, look, I would just say on the trade deal itself, you know, and I won't delve too much into the global discussion, but in terms of the U.S. outlook, I think it would remove a massive overhang. Now, what we saw in the fourth quarter and early this year was sentiment took a big hit. Any CFO, CEO survey, you know, has pretty much tanked. And what equity investors have been worried about is, will that adversely impact the U.S. economy? So sort of remove the ability of the U.S. to weather the storm. So I think it solves a very big problem on that front.